Hi guys, Dan and Kai here again from Crescent Mortgages, coming to you with one of our FAMQs, frequently asked mortgage questions, and today's topic is going to be capital raising. What this means is borrowing extra on top of your additional mortgage for a variety of purposes, whether that's home improvements, consolidating debt, personal use. We're going to jump into it in a second. Before we do, just to remind you, we are CMAP qualified mortgage and protection advisors practicing in the industry for a combined 20 years. Let's jump into it. Okay, so capital raising. I'm sure a lot of you are familiar with the term. Some of you may have actually already done it. But first of all, what is it, Kai? What is capital raising?
Capital raising is raising capital.
Good point.
So capital raising is releasing additional money. So
On a property that you already own.
yeah, exactly. So generally involved within a remortgage, and that is you, borrowing more money for a purpose of some sort that you would normally need to specify.
So for example, if you had already had a mortgage of 100, let's say you bought the house 5 years ago, you've currently got a mortgage of £100,000 on your property, and you have equity in that property, which means that the value of the property is higher than the mortgage. So the difference is your equity, that's technically yours. If you were to sell the property, that would be the money that you take out. If you have equity in the property, you can usually release that equity, which is known as capital raising. So if you had a mortgage of 100,000 and you wanted to borrow an extra £20,000 for whatever reason, which we'll come to in a second, then by increasing your mortgage to 120,000, that would be capital raising, and the additional 20,000 will be given to you for whatever purpose you plan for it.
Why? Why can you capital raise, I suppose, is the next question, isn't it?
Why would you? I guess any reason why you would need additional money. So the common ones, I think that we can probably cover the common ones and then maybe touch on some of the slightly more difficult ones.
Yeah, so I'll go first.
No,
we
you go
We
first.
go backwards and forwards.
Oh, this is good. Okay.
So I would say home improvements.
That's a good one.
Yeah, so any improvements to your home, big or small, most common way people do it is to borrow a bit of money.
Yeah, especially if it's significant. You know, if you're building an extension, refurbing the whole place, loft conversion, that kind of thing, then actually you might need, 20, 30, 40, 50,000 pounds. And actually it's quite difficult to find a bank loan for that amount. And even if you do find a bank loan, if it's over 5 years, that's going to be quite a significant monthly payment. Whereas if you wrap that into your mortgage, then obviously that's going to be spread over your entire mortgage term, which, often 20, 25 years, maybe longer. So actually, because you're spreading that out, it actually reduces the monthly payment, and a lot of people don't feel that each month compared to, like I say, over a shorter loan. I gave quite a lot there actually, and I actually avoided the.
Yeah, you did.
Question,
I thought we were going to kind of play tennis.
Yeah, sorry
with
about
capital
that.
raising terms.
Well, I guess
you bought yourself the time.
The next one, a common one is debt consolidation. Now we should kind of disclaimer here that there is quite a lot more advice that we would need to give you regarding debt consolidation, because actually consolidating and wrapping your short-term debt, such as your credit cards and loans, into your mortgage, there are some risks and there are some downsides. But providing it is right for you, it is quite common for people to wrap up, like I say, let's say you've taken out several £1,000s on a credit card, let's say you've taken out kind of a few bank loans, and maybe the monthly payments there are getting a bit too much, you're not particularly comfortable with them, or you just want to bring it down to increase your kind of disposable income. Some people then will wrap that into their mortgage, so borrow the additional £5,000, £10,000, however much, to clear those debts. And again, you will notice then that reduces your monthly outlay, because you've spread the debt over a longer term normally than over the shorter terms that they usually allow for credit cards and loans.
Yeah, that to be fair, that particular topic is probably a topic for a video in its own right. And really you have to talk to someone for that. The next one I would say is to buy another property. Maybe buying a rental property.
I forgot about that one.
Buying a home down in the coast. I don't know. Buying somewhere else would be my next one.
Yeah, good point there. And I guess probably the final one that comes up quite frequently is personal use. Now, just quickly, the first three that we covered there: home improvements, debt consolidation, and purchasing another property. They're generally quite straightforward. Most lenders will do them, normally providing that you can evidence where the money's going. They're normally quite straightforward. Most lenders, that's kind of within their typical criteria. Moving on to the next couple, it becomes not specialist, but not every lender will do it. So personal use, whether that be buying a car, gifting money to a family member, purchasing anything else really, going on holiday, whatever you want to do with it. Some lenders will allow that. However, not every lender will. And the reason being is that it's very difficult for you to evidence where that money is going. And they obviously they do need their own kind of due diligence to make sure that the money's being used for a legal purpose. So it's a bit more difficult, but there are lenders that will do it.
Yeah, and then you do get in some quirky ones. I think you might be trying to pay a tax bill if you're self-employed. Or inheritance tax bill, possibly.
Setting up a business.
Exactly. Releasing funds for all sorts and they get more difficult and you get more limited. But a lot of them are doable, subject to it being legal is normally the wording. It's any legal purpose is quite a common set of wording, and you can normally find a solution if that's the case. But those 3 or 4 we mentioned are the ones that if we were to write down the ones we see, it's probably those 4 on a common basis. Yeah,
but I just, as you touched on that, I would say business use possible with some, but I would say you are far more limited than the others. So again, if there are other limitations around your case as well as that, then you could start to find that you don't have a huge amount of options. But again, if that's something that you really want to do, run it past the broker and they can do the research to see if there are lenders that will lend to you. I think that's kind of everything that I wanted to cover.
Yeah, and I think we kind of cover, we did cover how really you would do it, and I mentioned, I think very quickly at the start, you do it normally by remortgaging, and that might be through your existing lender, which is often called a further advance, and they'll give you some extra borrowing on top of the mortgage you have, or you would remortgage possibly to a new lender, and that new lender would release enough to pay off your mortgage that you currently have, I should say, alongside the additional money all in one. But those are the quite simply the 2 ways you do it.
Yeah, generally. I think if you're coming to the end of your existing mortgage scheme, it's obviously quite frequent to do a remortgage to a new lender. Obviously, if you're tied into your existing scheme, then you should really consider if you're going to remortgage to a new lender, because there'll usually be an early repayment charge to redeem your existing scheme. So do look into that. Again, your broker can kind of look at that and give you advice. But yeah, like Kai said, further advance with your existing lender or a full remortgage to a new lender are usually the 2 times when it's easiest to capital raise. I think that covers everything from me. It's a relatively straightforward one. But any questions, obviously let us know, leave them in the comments, or contact us through the description, head over to our website or give us a call, and hopefully we'll hear from you soon. Thanks a lot.